Welcome to Requity Insights, a channel dedicated to documenting our journey to 100 world-class communities.
Welcome to another episode of Requity Insights. My name is Velez, and I'm joined by my co-host and the founder of the Requity Group, Marma. Thanks, Dylan, for joining us again.
Always a pleasure, Lewis. Excited for today's episode.
Well, on today's episode, we're discussing the opportunities and the challenges of investing in the growing RV campground industry. RV campgrounds have been on the rise in recent years, with more and more people choosing to hit the road and explore the great outdoors and recreational vehicles. Today, we'll discuss the current state of the industry, the potential benefits and risks of investing, and key factors to consider when evaluating the investment opportunity. Dylan, can you begin by telling us a little bit more about the RV campground space and what attracted TRG to it as an investment opportunity?
Yeah, definitely. Well, initially, starting off in terms of how we sort of fumbled into this, I won't get into more of the stats on the industry itself, but TRG was initially formed, and initially we were targeting manufactured housing communities, or traditionally known often as mobile home parks throughout the Southeast United States. And as we built a portfolio, we eventually found a deal that had half of the manufactured housing community was occupied with long-term RV residents that were just living in RVs. So it kind of functioned very similar. And then as we got comfortable with that, we eventually saw a larger, I'd say pure play, what many would consider to be a seasonal campground, where people paid for the entire year and kept their campers there and came and visited on the weekends. And we said, well, this looks like, pretty fun business to be a part of, and it looks very similar to what we know. So let's give it a shot, right? And that's where we realized, it is definitely more of a hospitality business, whether they're short term or long term. And we started doing all kinds of events on almost a weekly basis on that campground, and then continue to surround ourselves with people in the industry and learn up on everything we could about the space. And it's turned out to be just, people, I think other campground owners get what I'm saying, but I oftentimes get question marks when I say it's just a really fun business to run, because I think it's just fulfilling to kind of see the impact you're making, and you're really there to create just awesome guest experiences, right? And I think it's very unique in that sense versus a lot of traditional real estate where, most of your time is occupied with, tenants and toilets and termites, they say, right? Where this is really focused on, making sure that people are checking in and greeted well, making sure that they're having great experiences. Obviously, you still do have utilities and your traditional real estate issues, but it's just a unique industry, and it's now kind of diving into the industry itself. RV campgrounds are ultimately it's a subset within the greater outdoor recreation economy, right? So the outdoor recreation industry itself has generated an output of $862 billion in 2021. And it represents about 1.9% of GDP. So this is obviously the entire industry, though, right? Yeah. This is everything from your, ski resorts to your, outdoor sports to your, RV camping to your traditional camping to, everything outdoor hospitality related as a whole, right? So RV campgrounds are much smaller subset within there. So campers themselves and campgrounds saw a total of about $44 billion in spend. Okay. So they make up a small subset of the greater outdoor hospitality industry. And that said, it's been trending upwards consistently for the last 50 years or so. So it's had a really steady growth rate, and it was pretty significant if you look at even from the early 2000s up to present. And then when COVID hit, it really accelerated things drastically. So speaking towards the growth rates the compounded annual growth rate from 2014 to 2022 was about 8.4. Now, a lot of that did come when COVID hit. So from 2019 to 2022, the compounded annual growth rate was at 12.7%. Wow. Now, that probably goes to show that prior to COVID, you could probably estimate that the compound annual growth rate might have been 6% or so. And I think that's what a lot of the future projections are saying. It's going to go kind of reverting back to where it was pre-COVID in terms of the continued growth. But they are saying it's not it's not slowing down. It's going to still grow, but it's probably going to grow more at maybe a 6% compounded annual versus 12% like we saw in these last few years. So if anything, we think the industry was sort of accelerated with that. And I know in previous episodes I've really went into the different types of campgrounds, but what makes this asset class very unique is that there's all different types of campers, all different types of campgrounds, and therefore you have to really know what you're looking at. So when I speak about the space, I'm speaking about campgrounds as a whole, which are everything from, you could even consider there be state parks, which obviously doesn't really have an impact for us, but as for the industry we're in, is more of like your private campground that are there for profit. And that can be anything from your sort of bare bones, partial hookup sites that are in the middle of the woods, that dirt roads and very kind of rustic. That might be $30 a night, and then you also have your somewhere in the middle where you have paved roads, dirt. You could have paved roads with gravel pads. Then you can have all concrete, and then you have your high-end resorts, right? And then you also have all different amounts of amenities and qualities of your bathhouses, laundry rooms, what the guest experience looks like. And then you also have all different lengths of stays. You have some that are predominantly there for true sort of short-term or transient guest stays, and you have some that are there for more people that are there month to month, and some that are long-term. So you really have to understand the dynamic. And I like to say that every campground in itself, I like to look at each one totally independently. Unfortunately, as much as I'm a systematic thinker, you just can't put them in a box and say, well, this one is exactly like this one, so we can do the exact same thing here as we do over here. Yeah. You can find similarities, but everyone's a little bit independent, and some are positioned really well to be able to service more of your workforce, your traveling nurses, your maybe blue collar workforce, temp labor, or even long-term labor that just likes to live in their RV. And others are more there for recreational purposes and things along those lines. So that's my 30,000 foot overview of what RV campgrounds are and kind of how we fell into this.
Yeah, it's crazy to see the growth that happened over COVID. I think if anything, the industry got exposed to a lot of new campers, and now it's got to focus on how to retain them, right?
Yeah, the industry got exposed to a lot of new campers. I think as people were cooped up and sitting around thinking all day about, how can I travel again, and hotels were all shut down, I think our RVing definitely got Googled a lot more than it ever had been before, and that led to people going out and buying a lot of campers, and led to, there was, I think, definitely over a $10 billion backlog of RVs with Thor Motor Industries, which is the largest manufacturer of campers. They make Jayco, Airstream, a lot of the other big names that are popular, and a lot of that backlog is still being fulfilled to date. So you had just a massive demand coming into the RV purchasing industry, and now you're kind of seeing that trickle down into campgrounds with everyone's got brand new campers that are just looking for a spot, and they're having to book a lot longer out because of all the new demand that's fell into camping.
That's great. How does the underwriting and due diligence process vary with RV campers versus other assets like multifamily or mobile home parks?
Great question. So every real estate asset type is going to have some nuances, and it's takes having industry specific expertise to really understand how to do due diligence well. Right? A lot of the same broader concepts apply. You're going to get a phase one to get environmental study done on the property itself to make sure that there's no gasoline in the soil or stuff that would make it dangerous to be able to build on top of or inhabit. You're going to get your traditional survey. You're going to call into the county to make sure that it's zoned properly. I mean, the zoning is a big piece here because I think when you're in the business of apartments, you kind of often, I think at least 9 times out of 10, it's sort of zoned as an apartment building, and you kind of know what you're going to get. But campgrounds are unique in that a lot of these owners might just, in the middle of the night, just decide to add a few more sites without running it by the county, or start to move some things around with the private utilities. And you want to really know what you're getting into when it comes to that. Some sites are grandfathered in too, which might put some restrictions on what you can do for future expansion. Some counties didn't have zoning ordinances, and now they have new zoning ordinances, so it might take a lot to be able to come up to the current code that is in place. So really drilling down on zoning is extremely important in this space to make sure you know that it's compliant as is, to be able to make sure you know what it takes to do, expansion, and if you do expansion, what's required, what goes into that. So zoning is a huge part of our due diligence. I would say, you can kind of break due diligence down into multiple parts, but you have sort of your physical due diligence and then your financial due diligence. Okay. So what I just spoke towards is probably more relating to your physical due diligence, and I'll continue on the physical due diligence. You want to really be checking in on how many sites there are. I know every a website or everyone's going to have a number of sites, but right. you'd be surprised. We've went out and had to count and get 4 different numbers, and we ended up having to really do actually walk the entire place and check every single site and count to make sure you got the right site count. Yeah. Then out of those sites, you got to figure out how many are full hookup versus partial hookup. Okay. So partial hookup usually means that a lot of times they have water and electric, but there's no sewer there, okay. Which means that this is often more common in short-term campgrounds, right? If they're not living there or if they're not staying there for a long period of time, they'll come in, they'll fill up their tank and go to usually like a dump station to be able to dump it out after they're done staying there. But a lot of times we like to have all of our sites full hookup, so we have to go around and see how many are water sewer or how many are water electric, and then which ones do we need to add sewer to, or is it possible or even feasible to add sewer to that. Then you got to figure out out of the ones that are electric, how many are just 30 amp, how many are 30, 50 amp. A lot of the older campgrounds are built with 30 amp pedestals, and the issue there is that a lot of the newer campers do require 50 amps to be able to, run at their normal capacity. So a lot of times you're finding yourself do heavy, electric upgrades on older campgrounds and upgrading.
Some sites go beyond 50 too, is that correct?
Yeah, there are also sites that go to the 100 amp.
Just to accommodate more things within the
campground? Size, yeah, for, the big rigs, and then, I think certain people use those for, park models or other, different types of campers that you can put in place, but we for the most part are 30-50 amp when we do our upgrades. That's generally the audience that we're targeting on bulk of our campgrounds. Yeah. But there are also 100 amp sites you can install as well. So I think that's an early summary on some of the things that you're going to look for in physical due diligence. But of course, I could probably talk for another 30 minutes at least on physical due diligence alone. So we'll kind of bookmark that there. But then on the other side of things, you have financial due diligence. So for financial due diligence, you have to be thinking about what is the previous occupancy? How does that look over a 3-year timeline, right? How did things change after COVID? What were things at before COVID? What does the long-term future look like? Then you have the other piece of things is where are the rates currently, to see how much the previous rate increases. So over the last 10 years, how many times have they increased the rates? What have they increased them to? That can be really telling, because if they haven't increased the rates ever, then you probably can venture to say, well, they're below market rates. But if they've been increasing rates aggressively every year, I've actually seen some where I said, well, we're going to charge less than what they're charging right now, because we have to play, especially this is more speaking towards the short-term campgrounds, we have to play this delicate game of maximizing occupancy, right? So because our main goal is how do we maximize and get the absolute highest effective gross income on the property, and the way you have to do that is kind of playing this balancing act of, well, if we lower the rates but we think we can get 15% more occupancy, then that might be worth it. So it's definitely a balancing act, and revenue management is an art in itself. And I think so that's a lot of the stuff we're dealing with on the financial side. And then obviously you're going to go through all their expenses. We feel like more often than not we kind of know how we're going to operate the place. So on the expense side, we're using more of our numbers at this point, but especially on your first, if you're looking at getting into this space, you have to really understand what are their current, expenses. And I always recommend for someone new, don't ever go in thinking you're going to be able to cut expenses. I think that's a really short-sighted move. We're usually going in expecting, most of the time payroll's going up, utilities are going up, everything's going up, because that's just the nature of the way the world works. And we find the best deals are not made from just nickel and diming to cut expenses. They're made from, figuring out how do we invest the right amount in this property to really bring it to its whole, maximum potential, and then boost the revenue as a result of that to be able to, drive the bottom line net operating income. Yeah. So financial due diligence is also, it's also got a lot of nuances there. I'd say it's one of the harder asset types to underwrite and do due diligence on, because it is definitely more of an art than a science, whereas there are certain things, certain asset types where it's much more just kind of cookie cutter, 100 people underwrite it and everyone's within 5% of where the other one is, whereas this is definitely going to vary a lot more based on who's looking at it and how are they seeing things and that type of thing.
RV campgrounds have multiple ways to bring in income too, right? Like, so looking at it from a site perspective, there's like nightly sites, it could be weekly, monthly, yearly, and then there's also revenue that can come in from campground stores and selling wood and other things like that. Is that correct?
Yeah, totally. So there's all kinds of other income with, charging for amenities. I've seen people charging for usage of lakes or pools in some cases. I've seen, we do a lot of campground stores on site. Golf cart rentals are extremely popular. There's all kinds of little arcade games can be meaningful. Laundry can be meaningful because a lot of people, like to use the place's laundry machines versus the all-in-one units within their campers. So there's all kinds of little, additional sort of income streams, and we usually look at those as more just, if we make a profit on those, we're going to be happy about that, but we're not really making or breaking a deal with the other income streams. Like our, gasoline sales is another popular one. So we like those, and they definitely can be meaningful in terms of, maybe bringing our NOI up. I don't know. I would say somewhere in the, the 5% range, maybe up to 10% range. So that moves the needle a lot if you're able to achieve that range. But at the same time, I guess the reason I'm trying to what I'm trying to communicate is that the real value is usually in the rental rates. The vast majority of it is in the rental rates and also bill back of utilities if you're kind of factoring that into your income. Yeah. That's the most important thing, and I think that you don't want to create an experience of your customers feeling like they're just getting nickeled and dimed here and there. Yeah. I'd rather build it into their rate and just kind of be thoughtful about the other fees and the other expenses that we charge to the customers, so they feel like they're getting value for that big rate that they've paid for the place itself. So that's our general philosophy, but to your point, it can be really, we could look at the same campground and have a totally different outcome, because you could say, well, I'm going to model this one as a seasonal campground with the, two full-time workers there, and the rate's going to be, $6,000 a year. And I might say, well, I'm going to model this as a short-term place, and I'm going to have, target $10,000 to $12,000 a year in gross income per site, and have 5 full-time people, because I need a big staff to be able to support it, to be able to create those kind of experiences and service that short-term revenue, right? And we'll have totally different expense ratios. We'll have totally maybe exit assumptions, and that's where I think the space is dynamic, and it gets interesting.
Yeah, it definitely seems that way. What are some key factors to consider when evaluating specific RV campgrounds, such as location, amenities, and target market?
So this is where stress testing your thinking is extremely, extremely important. My biggest piece of advice for anyone in the campground space is definitely being conservative. I almost don't love using that word, because everyone likes to say that they're being conservative, but I'll give you maybe maybe I can better phrase that. I say definitely put weight on in-place results.
Gotcha.
Okay. Now, there are different types of campgrounds that involve different levels of risk and different levels of difficulty in being able to project out the future. If you're looking at seasonal campgrounds, I frankly think that seasonal campgrounds or annual sites are the easiest to project forward, and when it comes to both rates and occupancy, right? Those are the two big variables. It's not just how much can I charge, but it's how much will my occupancy be at my target level that I'm going to be charging, right? That's what makes it difficult, because you don't have CoStar, you don't have all these comps out there. You're really having to do your own homework, get to know an area, and figure this out yourself. Yeah. So I think, for starting off, you're probably much safer going with an annual site or seasonal place, because you can look at what are they charging currently, and maybe they're, a lot of times I see them at 100% occupancy. I'm not saying that you should model that, but saying that it's not uncommon. That usually tells you they're a little bit below market. Okay. And then you may be able to kind of do some due diligence, and hopefully you can find a few comps in the area and see how much they're charging. And maybe you say, well, I think I can charge a little bit more, but I think my occupancy is going to drop down to 80% or 90% at stabilization. And I think, maybe it'll drop down even more at first, and we have to do a lease up period. Yeah. But I think I could probably charge this much more, right? And maybe gradually bring, the guests up to the market rate over, a period of several years, and you model that out. And then when it comes to the expense side, maybe the owner is running it themselves, and you realize that, well, I need to definitely hire a full-time manager and a maintenance person to support. Usually you always need at least 2 people full-time for campgrounds. They have higher payrolls, but that would be more of like a predictable base case to start when it comes to like looking for a campground, is something that you think you can really feel comfortable with the predictability of it. And then if it's a short-term campground, starting off, I think the easiest thing is just, what is it doing currently, income and expense-wise, and am I happy with that? If it doesn't do any better, could I live with that? Yeah. And buying it at a nice cap rate where you feel overall good about that. And then if you're saying, well, this needs to be a value-add deal, it needs to have upside, that's where it gets difficult, because I think you can project, we oftentimes project small incremental increases in rates, or, we'll kind of stress test different concepts to see how can we create more value over time. Because we always have a plan to create value, but it's more just, we don't want to over project and say, well, they're doing 50%, I'm going to go and do 70%, and I'm going to charge, $10 a night more at the same time and double their NOI in, a year. It's like, okay, well, how do we have confidence we can do that? I can make anything look good on a spreadsheet, but what gives us the confidence of actually being able to stick to that? And you need to have a true conviction with true data points, I think, to be able to fall back on that. Right. And that's where I think I say that to just say that, when we're saying what do we look for, that's the mindset that we first start with, and then the location is the other piece of the equation that you have to get right. So I think a lot of people will say that they want to see something within a 2-hour drive radius of a major city. Okay, you start driving 2 hours from any major city, I promise you're going to find middle of nowhere in any single state in America, right? Like it does not. There's any city in the country just quickly will fall off after 30 minutes, and then you'll be in the middle of nowhere before you know it. Right now, I don't like that strategy. I think that it's dangerous, because I think you're now opening yourselves up to, even if the place is already doing relatively well, what happens when they start building closer to the city and supply starts increasing closer, and why would someone drive to this place 2 hours away when they got a really nice place 1 hour away? Yeah. Maybe if you're on some sort of a natural amenity, then you can make a case for it. But if you're in a low population place, unless you're on the most beautiful lake in the world, or some major natural spring or something that the Grand Canyon, unless you have this real big natural draw that is going to be always drawing people out there, then I would be really hesitant about that. We typically are targeting within 1 hour from major cities, but we're also looking at, we like to be within major MSAs. And one thing that may be somewhat unique to us, but helps us probably sleep at night and just feel higher levels of confidence in the deals we're doing, is we also like to be in good submarkets, which sounds like obvious for a real estate investor, right? But in the campground space, I think a few times I think people have this mindset of, well, we'll just be in this kind of destination place because they're going to drive there anyway. But we like to actually be in a sub-market where there's jobs in the local market. We feel like there's maybe bars and restaurants and other activities that people can go participate in the local market. Because a lot of our campgrounds are longer term. Most of them are annual site agreements. And we want, people want to come and visit. They want to have community around them. And though we don't always allow full-time workers to live in our campgrounds, depending on sort of the model that we're running on each campground, we like to know that there's demand there, right? I think it's comforting to know that, hey, we have enough demand to fill this as a recreational kind of seasonal campground. But if we needed to pivot, if the economy starts turning or markets start moving, we can also fill it with a workforce base. So we have multiple ways that we could run this campground and be able to achieve our income goals, and that's what makes us feel best. So ideally, we don't have an exact number yet, and we're kind of putting together our secret sauce here, but we look at it for a certain number of population within a 20-mile radius from the actual campground itself. And then we're also looking at the actual MSA itself, the 100-mile radius, and so on.
That's really interesting. In your opinion, what is the current state of the RV campground industry? Are there any notable trends or developments that are kind of driving the growth that you're seeing?
So I think the state of the industry, the trends themselves, I think you are seeing a shift in the audience that is camping. The average household is now $100,000 or more household income for campers, and that's changed dramatically because it used to be seen as sort of, say, lower middle class activity
vacation
for a while, right? And now it's something that I think the whole middle class and now upper middle class, and some of the upper class are moving into now, and I think everyone's participating in it, right? And because it's not about sort of your income, and I think it's really not like a status thing for most people in camping, right? They're doing this as just a way to disconnect and connect with people from all over, all different walks of life, and I think that's been unique to watch. And I think a lot of that also has to do with just sort of the rise of work from home. I think this is the first time ever in history, right, that we are seeing this massive segment of the population working from home and having Wi-Fi. And now there's new technologies like Starlink and fiber Wi-Fi coming available that make it easier than ever to get good Wi-Fi, good quality Wi-Fi, so someone can actually sit there on their laptop and work all day from a campground. So you're seeing a big spike in full-time RVers, spikes. You're seeing longer stays coming about because of that. So I think those are a lot of the trends driving the industry. You're also seeing a ton of younger people, not just RV campers, but campers as a whole, where a lot of Gen Z and millennials. Now, when you look at RVs specifically, you see millennials leading the way there. And I think that's something that a lot of people didn't see coming. I think they thought it was going to be a lot of just retired baby boomers, kind of supporting the campground industry. But you're seeing a lot of younger people for the reasons mentioned, getting together and going, buying campers and going, and they're really leading the pack. So I think a lot of campgrounds are starting to try to adopt to their wants and needs now, right? And they're saying, well, we might need a business station so they have somewhere to work out of, or we need to upgrade our Wi-Fi.
Big one.
Yeah, we need to maybe get bigger sites to support these new RVs. We want, maybe they want more amenities. You got to upgrade the pools, add some more stuff to do throughout the campground. And you have to remember, too, who are you really serving? In our view, most campgrounds around the country are family-oriented. This is really a family activity. So you're really trying to target, of course, a lot of times husband and wife. And I think I've heard a number of campgrounds and data points saying that it's usually the wife doing all the shopping, making the decision for which campground to go to. So you'll you want to market kind of towards them on your websites and the upfront advertising, and then the having stuff for their kids to do is extremely important, right? And I think they want places that their kids can go and play and be distracted and ideally supervised, that will allow them to have some time to themselves. They're not all cooped up inside of their RV all day, right? So that's I think a lot of what you have to think about when you're looking at it from the operational lens.
Yeah. How much of this change in demographic would you attest to like a shift in mindset from like the roughing it mentality more to this like glamping experience?
There's definitely a shift, no doubt. I think if you look at just, again, I'm not someone to speak towards what it was like, 40 years ago because I wasn't here 40 years ago, right? So I can't speak to it more than from what I read up on and what I see and hear. But if you just look at, I think oftentimes about how campgrounds looked 40 years ago, similar to how maybe state parks look today, where you go in there and it's totally rustic. Anything's it's hardly gravel, right? Maybe it's all dirt. Maybe you get some gravel and a lot of partial hookups, and you're really out there in the woods, right? It's
off the grid mentality.
Yeah, and tent camping itself. I mean, I grew up going traditional tent camping, right? And that was definitely roughing it, right? And I mean, there's something to be said about that, right? It can be nice, kind of going through the motion of setting up your camp or setting up your tent, and having back pain the whole next day after sleeping on the hard dirt, and just going really roughing it, right? Like and spending time in the woods, right? But I think the most modernized, we'll say, Americans right now, we have this sort of different maybe standard for quality of of our recreational experiences, the weekends we want to have for ourselves. So, but we still have something in us that wants to go out and connect with outside and nature. So I think campgrounds are doing a good job of sort of adapting to where you find that middle ground where, you know, you're still getting chance to sit back and see an open sky and go on hikes and go out on the lake and, you know, experience spending majority of your days outdoors and doing activities, but doing it in a way that is maybe upgraded to, you know, new standards where, you know, you have nice walkways, landscaping, scenery, amenities, and, you know, and obviously you're staying in a nice camper. That's much easier than, you know, traditional tent camping. And I think even traditional tent camping is starting to sort of, I think over time we'll get kind of not never phased out, but I think you're going to see a continued demand towards more of like a glamping experience where, I mean, you know, they talk about young people like wanting everything done for them and they don't even want to mow their lawn anymore, or they don't want to fix the toilet. Like I want every single thing done for them as we kind of move into like a renter's nation. It's no different when they're going camping. They don't want to have to pack the tent, set up the tent, you know, deal with all, you know, putting the bed together. They just want it all done in a box and they'll pay for it. So I think that's what glamping is in a lot of ways.
Yeah, I agree. Sorry. What are the potential benefits of investing in RV campgrounds for investors?
So for investors, let's deep dive into this because I have to wear multiple hats throughout my day. I have to wear my operator hat and then I have to wear my investor hat, right, and see things through the financial lens. So let's just talk, you know, pure financials and what drew us into the space to begin with, because I think for us, we are, you know, investors first and foremost, right? Always, but we also take a lot of pride in what we do as a world-class operating company and servicing the guests that we have in place, right? So what drew us into this space is the, you know, the investment potential behind it, right? Yeah. And we see a ton of long-term growth, most importantly, for this space. I think if you look at what, you know, the most sophisticated, biggest, you know, check writers in the world, what do they look for in a real estate investment? They look for NOI growth potential over time, right? They look for long-term growth potential, ideally minimal capex, and the ability to just get the highest compounded return on their investment. Yep. And we see a lot of that here. What led the manufactured housing community boom? What took mobile home parks from, you know, being a asset class that traded in the 8 to 10 cap range to trading in the, you know, 4 to 6 cap range over time was the fact that people woke up to the idea of this, you know, the land lease itself, right? Like, oh wow, I can own the land and the resident could then, you know, take care of their home. And I will just collect for taking care of the utilities, maybe the landscaping and the overall management of the community, but I don't have to, you know, deal with residents damaging the home that I own and, you know, having to constantly paint and having to constantly pay for all the turnover costs and the ongoing, you know, maintenance of this, right? So they created this just great investment model, and I think in the MH space, people like the fact that it, you know, it's really sticky and everyone's going to stay there for, you know, 15 to 20 years on average once they own their home. So it's just a long-term stable investment that requires minimal ongoing reinvestment into the actual physical structures themselves, which can be really, really expensive. I mean, if you look at, you know, apartments, the capex per unit per year over time can be, you know, $1,500. You know, it can be really expensive because you got roofs constantly, you got, you know, flooring, you got plumbing issues, HVAC issues, everything, right? Whereas, you know, MHC might be $250, or, you know, really most people probably model even less than that per site per year in ongoing, you know, upkeep and capex costs. So you have low capex, and RV campgrounds are very similar. You also have lower ongoing capex costs. And what I like is that most of our capex doesn't have to go towards just fixing roofs. It gets to go towards, you know, nice, cool stuff that makes the place better for everyone, right? We get to invest that, you know, $250 per site per year into, you know, how can we improve the landscaping? How can we, you know, make each of these sites different, right? Can we add fire pits to some of the sites and add picnic tables to some of the sites? Can we add a new amenity? Should we add mini golf? Should we, you know, upgrade our existing arcade? Should we upgrade the bathhouse, right? It's mostly actual improvement money that's going into how can we make things better, in addition to some of the deferred maintenance stuff that you're going to have, your utility systems and stuff like that, right? So from an investment perspective, you got a low capex investment, and then in terms of the stickiness of the income, depends on the type of place you're looking for. If you're a lower risk investor that would rather have a lower return but a more predictable return over the long period of time, and say, well, I'd rather have a flat 6 to 8% cash on my investment, and I'd want to have the highest level of confidence that that's going to be there every month or every year. The way you would do that is probably go invest into seasonal or annual site campgrounds that have that steady, consistent revenue. Because if you're managing the park well and you have the guest base that gets along well, they're the good tight-knit community, a lot of them will be there for 10, 15 years. I mean, you'd be amazed at how long people stay there, and they want to pass that site down to their kids, and just becomes a part of the family all of a sudden, right? So that's a great way to be able to achieve that long-term consistent income. And then if you're more, we could say, opportunistic, and you say, well, I want to maximize my cash flow and I want to see 10 to 15% cash on cash, and I'm okay if it to deal with a little bit of ebbs and flows and variance in that, then something that's more short term would possibly be better for you, because you're going to get more of your income through the holding period with the cash flows that you're able to receive. And that can be a really attractive way of doing it as well. But I think both of them have good yields, good cash flow, minimal capex, and then you have good just long-term trajectory, because the industry itself, from all the projections you can find online, you see growth over the last 50 or so years. It's just a really steady trend line, and we don't see it slowing down. We think it's going to keep on going, which means that rates will continue to go up, but hopefully with or faster than inflation over the long period of time. And a lot of the expenses have been going up, but not at a significantly faster pace than where rates are going up at. So you see this constant NOI growth over time that, if you look at the REITs, they've done consistent NOI growth, for decades with the campgrounds that they own. So that's what it's all about.
Is there any data, or do you have an opinion on the performance of the RV campground space during harder economic times?
Yeah, so there is data out there, but it is limited, and that is one of the challenging pieces of this business. It's limited data. If you haven't already noticed that from our conversation, where you have limited data on the occupancy, on the income, and you have kind of fragmented data available. So a lot of it is anecdotal, in the sense of just talking with other campground owners that we've met through all different industry events and networks that have stated that during 2008 onwards, they did just as well, and some of them even grew their income. That said, I'm sure there were people that were over leveraged, and we know, I can think of one or two stories off the top of my head that fell into tough times during that period of time as well, and we're probably just not managing the property well, and lost sight of things there, because these properties definitely don't run themselves. And when you look at, I think probably the best data point is looking at like a Jelly. I've seen presentations from Jellystone, I've seen presentations from Sun and ELS, the two big REITs, and also seen presentations from KOA. And those will show you that the campgrounds after the Great Financial Crisis, and also some data from the early 2000s, shows that overall consistent income through that time period, supporting the thesis that people still have 2 weeks of vacation time, they still have families that are growing up, they still are going to want to do something to travel, and then you have just pretty affordable means of traveling versus your typical hotel flight travel, right? So this is what gives us overall comfort in that. And then we also get comfort in the sense that there's a lot of people now that want to live full time in their campers, and we have a lot of a workforce base that, especially in tough times, there are people out there that will sell their house before they'll sell their RV, right? Wow. So you have that base of people as well that they love coming and visiting their RV, and they wouldn't mind living there. So.
That's great. What would you say are the pros and cons of purchasing existing campgrounds versus developing new ones?
So developing is definitely something that is interesting to us, and we do think there's a lot of opportunity there, largely because of what I mentioned about how a lot of older campgrounds, they don't really fit that mold of what newer campers desire. So I think there's a shortage of campgrounds that give you those massive sites, oversized sites that are,
amenity
30
rich.
by 60, or you've even seen some 40 by 80 sites, so you can fit multiple cars in the same site, and you have the hookups there to fit any size camper. Every site could fit a big rig in it, and then you have all the most up-to-date modern amenities, landscaping, layouts, things like that. Yeah. So there's a lot to be said about that, where when you buy an older campground, you're kind of having to just make the most of it, and you can bring a big improvement budget, as we always do, into the place, but you're still somewhat limited with, you can't really change the overall bones of the place, right? Like, you can't make a lot of the sites bigger, and there's only so much you can do with the existing utility infrastructure a lot of times. So there's definitely cons to older product in that sense, but at the same time you deal with more risk with new development, because anytime you add more variables in place, you then inherently take on more risk of, what if the builder messes up? What if you miss your timeline? What if you under budget? What if the bank note balloons? What if interest rates go up? And what if the demand isn't there in 2 or 3 years, like it is right this moment? Yeah. So you deal with a lot of different additional variables in that sense. And I think the big one too is that when you're buying such a good asset that's already sort of proven itself, that's always nice and comforting to show that people love it here. They're already getting good reviews, and we can make it even better, right? I think there's a lot of comfort in buying those type of businesses. Yeah. And when you look at investing into new development, you're kind of saying, well, I really hope people want to come visit here, and of course you're going to do feasibility studies and do everything you can to support your thesis, but you are still. There's the speculative aspect of, well, what do I think I can charge, and what do I think occupancy is going to be? So you just want to be conservative there, and that's all really, and just make sure you kind of protect your downside, and you're budgeting well for your marketing that's going to go into the place to get during the lease-up period and that kind of thing.
Right. What would you say are some of the potential risks of investing in the RV campground space?
Biggest risks are a lot of what we talked on earlier, just when we're in terms of what do we look for in a deal itself. I think being stuck in a really bad area is kind of scary to me, and something that we really try at all costs to avoid. Because if you're in an area that's dying, you're overly dependent on marketing and things like that to get people to come out and visit and hit your targets and cover your debt service, then that can put you in a bind. So we really always try to start with the catastrophic risk of, is this an area that could just be too soft? And I think that's number one, is steer clear of really soft markets. Yeah. And kind of form your market criteria and really stick diligently to that criteria. Then past that, you have the planning and zoning risk, right? Making sure you've done your due diligence and everything checks out there. You can have risk with private utilities if you have a treatment plant on site, or if you have well water. You could have some really big costs that were unforeseen if you didn't really budget for it and do your proper inspections. That can come back to bite you down the road, and those will always be ongoing risks as long as you have private utilities. So you have that. You have risks of expenses going up over time. There are risks, of course, of industry demand going down, right? While we do feel like it's likely to go up over time, or at least stagnate in a down economy, it could go down, and you could see occupancy starting to drop, and you want to make sure you've stress tested well to be able to support drop in occupancy or drop in rates. You have risks in, I think, new supply risk is one of the biggest risks. If too much new supply comes on the market, then all of a sudden your place might no longer be the attractive place to go anymore, and now you might have an uphill battle that you're fighting all of a sudden with too much competition and a supply and demand imbalance in a market. So I mean, there's without a doubt, I mean, every type of real estate has a lot of risks that brings with it, and campgrounds are no different. So.
Are there any significant barriers to entry in the space for things like new competition that you're mentioning?
It really depends. It really is more county specific. I think you have to really understand the markets you're investing into and see the county's appetite level for new development. In certain states and certain counties, anyone could go out and build a campground, and we've seen it to where people are building in their backyard and just setting up shop and throwing up a few RV sites and renting them out to their friends and family and things like that, right? So, you definitely want to know the area that you're in and make sure that they make it, ideally I want to see them make it challenging for new development to take place in that area. It doesn't have to be impossible, but I do want to see there being some red tape to be able to minimize new development. The other barrier to entry is just cost, right? It's sometimes actually nice to buy in areas where it's just not really cost effective to build new, because you just know that very minimal, especially big investors, are going to come in and do big projects, because it just wouldn't make financial sense to do that. So you feel kind of insulated that you've bought it below replacement cost, and you kind of insulated in that sense too. And then you got natural barriers to entry too. If you're on the water and there's not much waterfront land, or if the waterfront land is all priced at a level where condo developers are going to buy it instead, that can be really helpful too.
How do you offset headwinds such as higher operating costs for the park and increases in fuel prices for customers?
So I think the offset of the headwinds is hopefully, I guess, the tailwinds of the growth, industry level growth that we're seeing, good operations, and just prepping as best you can to be able to tackle any unforeseen circumstances that come up. So if there's when gas prices initially started going up, we said, well, let's start taking a lot of our short-term sites and offering month-to-month options or offering seasonal options, so you can try to help minimize volatility through getting more consistent long-term guests in place to help offset some of that. When it comes to the payroll side of things, I mean, that's just to be expected. That's probably an issue most businesses faced in the last few years, and I think that could be a cyclical thing, but I think without a doubt we budgeted a healthy buffer for payroll, just knowing that that's going to be something that we're going to have to be up against and is likely to happen. So I think that was somewhat predictable. And then with rising utility costs right now, which is a big thing, we are starting to hear a lot of talks around billing back for utilities as well, and actually doing individual meters for not just for electric but for water, sewer, and then also even for the electric, having stuff that can measure utility usage by day rather than by, usually you'd go out there and manually read it every month or something along those lines. So we could do lower rates, but you're going to be billed back for utilities. So it's really up to you in terms of how much utilities, how much time you're spending in your camper. If you're sitting inside all day watching movies with all of your ACs on and lights on, and then that's you're gonna pay for the additional cost there. But if you don't, then you're gonna save a lot of money because we're charging you a lower rate. You take care of your utility usage, right? Yeah. So I think it just really depends. But we haven't seen that too much yet. But that's definitely something that's in talks. A lot of campground ownership groups. So I think there's just keeping a pulse on what the possible threats are, and just thinking on your feet, and trying to figure out how you can be best insulated.
What are some best practices for managing and operating RV campgrounds? And I would say the ones that you contribute as the major impact ones for the RV space. Yeah,
definitely. Well, I think that number one, it's really just having the right people, building the right team. So, for us, we're really fortunate. We have 50 or so total team members, and our campground team members, everything from the leadership team, our regional managers, operations manager, and then down to the property level staff, and then down to the the part-time helpers and support staff that we have on the campgrounds. I think everyone is just really strong with their communication and shares a passion for what they do. We have constant Slack messages going, and Zoom calls of just because we're spread out through a few different states, so constantly sharing just wins and seeing the improvements taking shape on the properties, and sharing the events that we're doing, and jumping in when there's issues to help work together as a team to be able to solve that. So this is an operations intensive business. I would not let anyone fool you that it's not. And I think if you're considering operating, you should be ready to do it yourself. Even if you're hiring a third party, there's no way you're not going to be involved to some extent, and you have to be at least ready to lose sleep and roll up your sleeves and jump in there and help. So I think just knowing that and building the right team to be able to support that is extremely important. Aside from that, of course we have a laundry list of our SOPs and things that seem to work well for us, but I think just making sure you have the right improvement budget to go into the property up front to make sure that you're investing well into the property, and then you're setting aside enough cash to keep your ongoing investment into the property in place. paying attention to your revenue management, questioning if we charge more, how is that gonna impact our occupancy, and just sort of making sure you're optimizing the revenue, optimizing the guest experiences, keeping a pulse on good or bad reviews coming in, optimizing your online presence and marketing. And I think if you're doing those things right, you should be good overall, right? Just think of it like anything else. You have marketing and kind of your sales, which is your conversion from your marketing to conversion to your actual bookings.
Yeah.
And then you have your fulfillment, which is the guest experience there, and that's really led by the operations team as a whole. So
okay.
Yep.
Do you have any final takeaways for anybody looking to invest in the RV campground space?
Yeah, I mean, hopefully this was helpful for you. I know there are a lot of moving pieces, so I'm hopeful that by explaining all this, it brings further clarity to you and doesn't just create more questions. But I think, like anything else, I don't think there's a need to necessarily rush into it, but I think at the same time, getting started is also what helps you learn as you go. So you have to sort of weigh your own level of risk tolerance, and I think that just actually seeing this through your first time, I think the first go around is just protect your downside, make sure you feel overall comfortable enough if you're actively investing or if you're passively investing. Just make sure you feel comfortable enough with the operator or comfortable enough with the asset to be able to get in the game. And then as you begin to get that real life experience, I think you'll continue to further your thoughts on the space and your own levels of your own viewpoints on where the risks and the opportunities are in this, and then that'll evolve over time.
If you enjoyed today's content, please don't forget to like and subscribe. As always, thank you for watching.
Thanks a lot.
Thanks for tuning in to another episode of Requity Insights, hosted by our team at the Requity Group. You can find recordings of all shows along with our opt-in form to set up a call and view future investment offerings on our company website, therequitygroup.com, also listed in the show notes.